Hi guys, so in this specific video it's going to be short and sweet. This one is higher time frame versus lower time frame and why that's important. So one of the things with multi-time frame analysis is breaking it down so the process of what's actually happening in the market is validated to get in line with the trend of the market. So that sounds like a whole load of rubbish, but it'll make sense in just a moment. So, for example, right, if we're looking at the stock market here, we can clearly see it's in an uptrend, but this is a daily chart. So if I'm a day trader and say I'm coming off support levels, like this is a support level here, I am probably not going to be taking a trade for could possibly be 3, 4, 5, 6, 7 days. Um, Unless I want to short it here, which wouldn't be a good way to trade if I was a day trader and this wasn't my setup. So, uh, what I need to do is, in order for me to take trades, I need to get in line with what's actually happening on the time frames that I'm looking at. So, there could be a short here on a lower time frame, but at the moment, the market is only bullish. There was a shock here to the downside, but again, this was probably on the day the tariffs were announced on China, so that was a black swan event, and then it continued to create a break of structure to the upside. So, even though there was a shock, it still continued in the direction of the bias here in terms of the trend lines. So, multi time frame, why is that important? So, say we're assuming our bias is bullish here. And that is 100%. There's no denying that the market is still in an uptrend here. Even if it's starting to pull back, higher time frame dictates that the market's in an uptrend. And from what we know, this would be a strong daily low. So the probability is market isn't going to break this low because this was the lowest point that created the break of structure to the upside. But then what I can do is I can drop down to a 1 hour. So realistically, if I'm looking that there's a potential short here on a 1 hour chart, where is it probably going to go to? So biggest probability is probably this high, this support level. So that could be my main area to target. If I look at a 4 hour, there might be some imbalance here, or I might want to sweep that low to then continue in an uptrend. So there's loads of different areas down here that I could say are my take profit levels. There's no reason for me, if I was to short the market here, just say a short entry came up, the higher time frame is not dictating to me that I should set a take profit down here, that the market is going to crash in any shape or form. So this would be completely unrealistic to short the market all the way down to here. That's the probability of that is probably less than 0.1% of that actually happening there. So it's important to get in line with what the higher time frames are telling us, and that allows us to find the levels that not only to enter but also to exit the trades too. So if I'm looking at this here, we'll say we'll take it on a 1 hour chart. The higher time frame was dictating a bullish trend, but we're definitely in the process of a pullback here. And the reason I know that is because we have a change of character here. So we had a high that was violated. This is the lowest point. So this is our 1 hour break of structure. And this was the low that created the change of character out of there. So 1 hour dictated that we are now in a downtrend within this leg. So we pulled up. The high that made this low was here. So we can see here this low was created, and then this high gave us a change of character. So the 1 hour would dictate that we have changed character back to the upside, but it also came off an order block here. So let's just double check it on the 4 hour, which is a stronger time frame, and there has been no change of character on the 4 hour, but there has been a change of character to the downside. Sorry, there was no change of character to the upside on the 4 hour, but there is a 4 hour chalk. So my theory, because the 4 hour is defining to me, and this then becomes invalid, the 4 hour is defining to me that it came down, made a low, failed to make a higher high, and made a low. So we're now viewing that this is our draw on liquidity. And if it continues to break and hold that, this could be our next draw on liquidity, and so on. So it's still pulling down into these levels as it continues. So what I need to do is I need to look at higher time frames to dictate to me what is actually happening here. Like if I look on a daily now, we're kind of in a limbo. So I'm going to have to take the 4 hour until it tells me differently that we are still in a downtrend. There's no imbalance here. There's no there's nothing really happening here until it takes this low. So again, depending on what happens, if market comes down, it can either come down to this price and just simply wick that and then go higher. I don't know. Or it can come down, break the low, pull back, and then continue lower. I'm not trying to say I know where the market's going to go. I absolutely don't. All I'm saying is using the higher time frame, I can make a judgment call based off how the market reacts at these different levels. So if it didn't close below that low and gave me a change of character on, say, a 15-minute to the upside from here, I would be long. I would just be basically dictating that this high, actually let me just clear these off here, I'll just remove these drawings. This high, I thought they would go as well. So yeah, if this high fails to do its job and break and close below this low on a 4 hour, then this has become our new 4 hour week high because it didn't do its job, and whatever change of character comes out of here, this will be my next target. Then probably if we go up to the next level, there's a daily one here. If it wicks this, then that's our daily week high, and that's our next draw on liquidity there. So market's going to move up and continue higher above that as well. So that's why understanding the higher time frame structure and direction is so important. And then we basically allow the market to tell us how we're going to play any future changes in direction within the market as well. I hope that makes sense.